Good morning, this is Howie, and I'm here to help you win with money. Today is a new week, Monday, November 23rd, week of Thanksgiving and Black Friday. Markets open up sharply on news of other vaccine, but you see the market is downtrending. What does that mean? Normally this week, we see a nice pop, generally on a Wednesday, and then on a Friday, normally a lot of the news will show, hey, look at the crowds at the malls and the outlets and all these people lining up in front of Best Buy. And generally speaking, retail stocks will normally shoot up on a Friday and into the Christmas rally. So interesting things to watch. Will this year be different with COVID, and it may change retail sales? So today I'm going to do a quick trade, couple trades real quick. Here you go. I was looking to write a covered call on EA, but here's the problem I have with this. For EA video game stocks sell really well during during Thanksgiving, and you see the premiums. If I was to go out of the money, if I collect $11 or even $20 here, you see a $20 means I'm making 0.16 a week, which is really nothing, or 6% annualized. So what I may do is wait till Tuesday or Wednesday to see if this turns green before I do a cover call. No need to write a cover call on a this is a pretty big down day. EA can move to a $3 this week depending on how Black Friday goes. So I'm gonna wait on EA. And for those who follow my channel, know this is what I did the last couple of weeks. You see, on November 2nd, I collected $129, and then EA was moving up. It was moving towards 128.29, and you see my cover call was in the money. It cost me $444 or $400 to row, but I received $444 for a net difference of $38. So I collected another $38 last week, and because then EA went sharply down, it dropped all the way to 117 or something like that. I actually did a roll down, and you see here I rolled it from 129. I rolled it to the same expiration week. I rolled it down for an additional $5.47. So sometimes I do want to make an extra $5. I could have just been happy with that row and collected 38, add another 5 to it. It's 43 bucks, right? When you do that, I made 44 is what it says. It expired worthless this week, and now I start the whole process all over. I'm not going to make 130 this week on EA. You already saw that. Looking at my spreadsheet, this one here has 19 days expiration. This is an iron Condor. I think the market price is $355. I gotta update this real quick. So you can see I'm not at risk. This is pretty safe. I can close it out, and it says it will cost me $20 to close out. So I'll do that. Another trade I was looking at, Rocket. I've been writing cash secure puts. You see I already have 2 of them for next week, or maybe the week after. 2 weeks out. You see I'm already collecting some premium here. But I was thinking about doing another one for just this week. So you can see what the price is for, if I just zoom up for this week. So if I do it for 25, I can collect 25, or even something like this. The risk is really not bad. I'll show you the math. Here's a quick math. I can sell a $20 strike price for this week. You can collect 25. So it would be this one here. You see what happens? So you will make 1% a week, 1.5, 50%. If I go with something like this, you collect the $10. You make 0.5% a week or about 20%. I use 40 weeks, by the way, in my projections. I do not use 50. And then if you do something like this one, the $4. And so you make 0.2 a week or 8.5% a week. And real quickly, I just added back in the formula for those who use 52 weeks. This is your rate of return. I use a 40 week, and I know some people don't agree, but that's okay. My logic is you will not be able to duplicate any one particular strategy 52 weeks in a row for the whole year, thus making your return what you projected. In theory, that is the true rate of return. But because you're not able to duplicate that particular method 52 times in a row and for the whole year, right? If you miss one or if the stock moves up, I use a 40-week projection because this will give me a true or much better usage of how my cash will actually work. Anyway, that's fine. It doesn't really matter how you compute it. So this gives you a question of what is the most likely? Do I want to own it at 20? And really, I don't want to own this. So I can always buy that 20 and then roll it down, which is what I did last week. But I think what I'm going to do for this week is I just may start off with a $10 cash secure put, making a 0.5% this week for a 20% rate of return. And I may be happy with that. So that will look like this. I'll show you. You do a limit order. Make sure you do a sell to open. I am using cash to back this trade up. And what that would look like is, now if I do 11, it's not going to happen, right? There's only a penny gap. If you want the trade to go right away, you do a 10. If you're willing to wait just for that 1 extra cent, you do 11. So I would just preview the order and you will see the impact. You see that is using cash to back it up. That's what it's going to cost me. And I'm going to put the trade in. And there you go. I don't think it's going to execute. I can wait a few minutes. And then I'm just going to lower it to 10. And 10 will sell right away. There you go. I waited and it didn't sell. You do it at 10 and then it will. And to show you the transaction, look what happened. I had a limit order for 11. It refused to sell. I moved it to a 10. And I love this when this happens. The broker company gave you the best price possible. And it matched me to another, right? I'm the seller. It matched me to a buyer for 11. Exactly what I wanted. But I had to change the order and it worked. I like to delete these because they're useless for me. Let's see what else I can do next. While we were talking, you see this? When I did my Rocket cash secure put, a minute later, I had a limit order already out there and it executed. I was closing an existing iron Condor. And I'll show you that through my spreadsheet. And you can see this one is the 390, 400, 290, 295. So this one has been closed. And there's 2 contracts each. Now I believe I have this position. I think I have 2 exact same positions in 2 different portfolios. Let me just double check. Let me just scroll to the bottom here. And I may have misspoken. I actually have the 18 and 24 and 31 on this one. And so the 18, which I do have twice, but one of them, yeah, 2, 4. 24 is the one contract, and the 30, yeah. So actually, this is a mistake. I don't have that twice. Let me delete that. So I did close that out. This one is now closed. And I put it over here. It cost me, I think I had a limit order. And with fees, it cost me $20. I only collected $83 up front. This is not a big premium trade. It's a very low risk, and it's very low reward. You see that my spread doesn't even hit the 33% width of the spread. It's really a small one, but the profit is there. 75% profit. I closed it out. $35 away from either side. This is saying a $60 move for me to lose on the bottom side, on the put side, and a $35 move on the upside. I could have let it expire in 18 days. You see that? I had 18 days to go. I could have let it expire. There was no rush for me to sell it. But I generally sell any time between 15 days to 25 days. There's no rhyme or reason. I just do it when I have profit, and the profit look good. So you see, I track it. I know what I'm doing. Not huge trades. I don't care about making huge dollar trades. If I can make money, I'm okay with it. So I'm tracking these. These are still a little bit too early. September 18th still has 25 days left. And on this one, I collected 110 up front. I can show you what it will cost me to close this one today. So we can go here, hit the trade button. You can bring in all the 18 in here. Let me show you what it costs to close. And then we just have to hit the close button. And you see this? It will cost me, let's say, 13. So if you go in here, $13 is what I collected, right? Or $14. So you multiply by 2, you see. So the profits are there. I mean, they're there. You can make money on these things. But I'm going to wait. 25 days is the beginning. This one, I may wait. Do I want to wait till Wednesday, Friday, or even next week, Monday? I'm in no rush. These are in no danger. These iron condors are in no danger. You see, I track the distance, so these are good. Now, I may want to write some new ones, create some new iron condors. So I'm just going to manage some of my positions now. I think I closed some of these out, or I rolled them. These are no longer valid. What I'm going to do is just make a copy of them, move them to my closed positions. They belong somewhere over here. I'll fix that later. And I'll go through my logs to figure it out. But what you do see is, do I want to close this Visa? Here you go. The one on 11 is 18 days. Oh, these are the wrong color. Let me fix that. Okay, so this is much more accurate reflection of where we're at. So you see this. What this is saying is my Visa is 18 days away. I need to close it. I think I just closed one of those. So let me just take a look at how much it costs to close Visa. And here you go. I hit the close button. That's what it looks like. It will cost me, and it's going for 7 for that Visa trade. Let me just check the spreadsheet. That Visa trade, I don't remember how much it cost me. It says right here, at one point I put $100 to close. It's not going to cost me $100 to close anymore. It's $14 to close. So the profits are there again. So this one, I may close it and write some new ones next week. So, or at the end of this week. So let's do that. Let's close this. I don't think it's gonna move much. It's $20 away from the top end. I don't think I'm in any risk at 18 days out. But this is the strategy, right? You close these things for 7. 7 equals, here you go. I'll compute it, 2 contracts, 18. And actually, I think I did the math not wrong, but on my spreadsheet, these should have been for 1 contract. So if it cost me 7, I should only put 7 here. Unless I did this wrong. I have to check the math again to make sure. So let's see if that went across. No, it's still there. So I just want to demonstrate something real quick. I want to create a new iron condor on the SPY, but I want to do something. Normally I go out over 40 days, so let me show you real quick what I have. So I created a new entry here for today. So I was thinking about, okay, if I go out here, this puts me at, let me just plug in the numbers to make sure. So I'm looking at something like this, a $10 spread, but I'm using a wide spread on purpose. So you're going really far out, but the likelihood of this event happening is very little. So it doesn't make sense to do a dollar width, right? The difference between these two values should not be $1. It will never make sense. But what you want to do is if you're doing something like this where the only thing you have to worry about is this 300 and the 390. What are the chances of hitting those? And if there's no chance, then what you do is you can go really wide. So what I mean by that is, let's say you want to go all the way out to a $15 risk, right? So you can do something like this. You increase how much cash. But you see there's not enough premium if I use this. And the reason why is even with 15 wide, it's only 38 days out. I already did a 30 days out a while ago. So now what does that do for me? Maybe I need to go even further out. And if you do something like this, I'll show you real quick what the numbers look like. And then we can fine tune it real quick. And then you can see January 15. Let's put in the spreadsheet. I pop that in the spreadsheet. January 15 is a 53 days out. And that's a little bit longer than I like, but there's not a lot of choices because you see how many weeklies are still available. But I may do something like that because I like to keep on having things to open and close. And you see a lot of my SPYs, I'm starting to close them because next week, this should be, I think I closed this today. These are going to get close. And these are in the middle of where they should be. So I want to start putting some new ones out there. And on this one, there is a January effect, right, where stocks may pop up. So you want to be a little bit careful of how that works. But again, I don't really care if stocks move up. My portfolio will move up, so I may lose on options. But if my underlying goes up, I may not care. And what that will also mean is S&P will be at new highs. My 401k plan will be at new highs. So my net worth will be at new highs. Sure, I'll lose some money on some of these trades. But this is how options trading can be used. If you have a lot of underlying that moves up, I'm okay with skewing my option trade to say, I want to have a shorter distance between when I write this to the short call, and I create more distance on the put side because I don't want stocks to go down. So real quick, we're going to check some odds using Power ETrade. We're going to check, let's put the date here, 53 days expiration. I'm looking at a 305 on the put side. I want to check the delta. Look how small that is. You see that? It's a 0.09. It's pretty small. So the probability of it hitting 305, I'm looking at 305 is here. It's 2% chance. So this is why I am not getting a lot of premium, because I'm taking a very low risk approach. Now I am risking more dollars for each contract. I have to put up 1,500. So I may not, let me just do the math real quick. And then on the upside, I'm saying 395. What's the odds there? And you see again, the delta is really low. The odds are 7% chance here. Okay, so that's sort of the odds. Here's the delta, 0.04. The odds. Again, I rather have it skewed and have more risk on the upside, because your portfolio, if you have a large 401k plan, then you may not care. The loss you take on your options, it's not as painful as if your portfolio drops. But if you're a cash player, there are some option traders who don't care about holding any underlying. They are using their cash or buying power, and that's all they do. Is they don't really care about the underlying. They just use it as a trading instrument. They don't have any underlying value, as in they don't have a portfolio of 401k plan. But I don't play that way. I do have a large 401k plan, mostly S&P 500. And this is just a way to say, if I'm wrong on the options, my 401k plan will hit new highs if it goes up here. Going back to my portfolio here, you can see that these are going to expire. So I'm not going to look at those, because those I'm going to close soon. So let's look at where the risk really lies. If this drops, I'm at risk at 310, but this one has less days left. So let's not worry about that. And on the upside, the big risk is this point at 385. So these, because they have shorter time frames, I was gonna do something with those anyway. So is this the right risk? It is 15 days left. So what I want to do is pick a range where I think it's not going to hit. And I may be okay with this. You see, this is a 90 whiff spread, and I have done okay with 90 whiff, 100 whiff spread and collected a $100 premium. Now these have smaller, you see this? They were smaller. These were $5 whiff. So I have to put $500 for each contract. Whereas today, on this one, I'm going to go a little bit wider, which I may be okay with. So let's figure out the math. I want to see how much it's going to cost me. I just adjusted it for how many contracts I want to write. You see, it's a 108. It says I will collect $300 today, 317. And you'll see the impact of purchasing power. So here, you can see it will cost me $4,000 in buying power to do this. And I've been moving away from Apple and Microsoft, so I only have $20,000 of buying power, so I have to make sure I keep some buying power available. And that's really the balance between keeping buying power available to either pay for your losses or so you can do other moves and other trades. Before I place that trade, I'm going to just put it in my spreadsheet real quick. So that's this one here. It's saying, I don't think I'll get it for 108. You see, normally it will say I'll get it for 108, but I don't think so. But for right now, that's what I use. You see, I put in 108. So let's place it and see what happens. After waiting for a little bit, it finally went across. Here you go. I got the contract, but it went across at 105. So this is not a 106 anymore. And for accounting purposes, sometimes I just put a cost in here, it didn't happen yet. But let's just put in $1 to close, which we know is not possible. It's still open. But I do that so you can see the numbers. Whatever. If I close it today, it will be $100. So you can see how the math works out. I have 3 contracts. I just put that in. My delta was, I've been trying to see if I track deltas. I don't remember what I said in the video, but it was pretty low. The odds are happening were pretty small. There you go. On the cost side, it was a phi delta 7.3% probability. Let's plug in the put side. And there you go. I just plugged it in. It was a minus 10 delta, 2% chance of happening. Again, these are really, they're not very sexy trades. They're low risk, good chance of being profitable, but you make very little. So I understand that options trading is a balance of high risk, right? You can make 400%, but the odds of winning are much lower, so you risk less cash, and it's an inverse relationship. And for me, taking a low risk trade works because I'm always constantly writing iron condors, I'm writing credit spreads, I'm also doing cover calls, so I'm playing it multiple ways. And in the end, it all adds up, and I still make a profit, and that's my go. And I think that's all the trades I have for right now. What I would like you guys to do is, if you like what I did, again, very few traders actually show you their trades during. They like to show you only their winners. I show my trades. I show my transaction logs. I dump everything in an Excel spreadsheet. I pivot it. You can see my P&L, my trades for my option trading. It's doing really well for 2020. And I don't expect any other strange outcome in the next 6 weeks that will change my results. I think I'm going to end the year making a decent profit using options trading. And I'm setting up my portfolio for next year. I'm going to let some of these contracts expire. But please, if you enjoy it, please share this with your friends. If you hit the like button, it will definitely help other YouTubers will find, other viewers will find the video. So help me out there. If you like, go through the affiliate links, buy a book that I recommend. And I believe that I can help you win with money. If you need a help or a comment below, If you like to see a different type of video, or if you want to see something else, let me know. So let's do this together. Let's do this $1 at a time. And until next time, have a profitable day.